India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, kicking off a new week. Last week was very bad, very poor and tough if you were bullish. I mean, even if you were bearish, I think, the force of the downside surprised everyone, one and all. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, morning, folks. I guess that's a critical question, right, Prashant, that after that 5% massive cut, I think it was the biggest slide in some 2 years, the weekly slide, whether now we are due for a bounce back, but just the ferocity of the selling from the FI fraternity, that's something, I guess, maybe that was the element of, complacency was a word a lot of our guests were using last week as well, and maybe that was it. That we didn't realize that when FI selling happens in this measure, it's going to hurt.
Well, that's right? The market surprised us on the upside, the way we moved up. And then, in fact, the reverse happened of late. I guess from a longer-term perspective, you need to participate, and these opportunities will prove to be buying opportunities. So let's hope for a better week in comparison to what we saw last week.
Absolutely. As they say, you can't get the good without going through the bad.
Yeah. Once
in a while. And it's actually literally been once in a while. Actually, more than anything else, take a look at what the market has done from the highs, right? It's down 5%. The problem is, it's not 5%. The problem that no one is used to a 5% pullback, not even a 5% pullback from the highs. And that's essentially been a feature of this bull market, very different from all the prior ones that we've had. But I'll get to some of the broader points in a bit. Let's get specific. So the Nifty on Friday fell another 200 plus points. So it was a fifth straight loss, fifth straight day of losses for the index, benchmark index. It didn't look good. And Friday especially was a very volatile day because at one point the market was up 150 and within 5 or 6 minutes it was down in the dumps, and again down about 50 points, and then selling accelerated into close by 3:30. But things changed. Things turned a little bit in the US market session. Now, US equities rallied on what was essentially a blowout September jobs print. Never a dull day, right, with regards to this monthly jobs data. If you remember exactly a month ago, this is essentially the number which triggered all the volatility for global markets for a few days because the number was so weak and the market panicked that maybe the Fed is behind the curve. Well, guess what? Fed does 50 basis points in terms of rate cut. The next number is a blowout number, is super strong. So what does the market do? It adjusts Fed pricing accordingly. But, the S&P was up about 0.9. The Nasdaq was up about 1.25. The next FOMC meeting is on the 7th of November, and the market is essentially crushed what Fed will do in terms of rate cuts to 25 basis points now. Actually, the cumulative cuts for this year, for the full year from here on, have been pushed down to 50 basis points. The only question is if we get another surprise on the downside this time in terms of jobs data, will this need to be moved around again or will this stay at 50? Remember, after the last 50 basis points cut, the median expectation out there was at least 100, if not 125 basis points worth of cuts through the course of the year. That's now 50, so it's pretty dramatic. Now, a big move in US yields as well, naturally. So data is strong. Economy is, of course, seemingly strong. Yields went up 13 basis points. We are back at almost 4%. Dollar index, well, it's been a global outperformer for the last 5-6 days now. So 102.52 on the dollar index coming through. Oil prices, they're above, around 78 rather. And of course, markets are still awaiting a direct kind of confrontation, escalation between Israel and Iran. We haven't got that yet. There is, of course, a fair bit of fighting which is going on in Lebanon, but nothing directly after those strikes by Iran. Now, China is the other big factor, right? And that essentially is the market which really pulled all of last week. The mainland markets were shut all of last week. They are back into the picture tomorrow. They reopen tomorrow, and we'll talk more about this. Now, the setup for the Nifty, at least in the near term, is looking good for a bounce. Just to sort of circle back and tie in the levels. For the Nifty, you basically, when you're looking for a bounce, you need to get past some of these big support and resistance areas. The resistance essentially is the 40 hourly exponential moving average first, which is 25,572. There you go. That's the number. The support is a zone, 24,800 to about 25,000. So that's essentially a 200-point range where the market should actually find some support. We are practically there in that particular zone. For the Nifty Bank, it closed slightly below the rising trend line level, which we highlighted last week as well. Support levels for the Bank Nifty comes in at 50,700 and then 50,242. So these are, the 5242 level is the lower Bollinger Band. On the way up, the gap area, when the market fell like that, I think it was on Thursday, that essentially becomes important. The gap area is between 52,582 and 52,817, and you got to get past that for further buoyancy and for the market to feel a little more confident. GIFT Nifty will come up on your screen, gives you an indication of how the start is likely to be. So about a 71 point upstart, higher start is what is indicative right now. Surbhi.
Yeah, absolutely. And, markets across Asia are actually building on some of those gains. And the moves for the Japanese market are worth noting because of the kind of strong non-farm payrolls data and a couple of other data points in the US, the yen, which was surging, has suddenly reversed course, and it's dollar on top once again in that market. In fact, the dollar-yen move has taken that number back to 149. So pretty dramatic moves once again in the currency markets playing out. All of this is doing, the non-farm payrolls data and the fact that there is continued buoyancy around China. Look at the Hang Seng this morning. Again, it's building on gains after a big last week. We've got another 1% sort of a move coming in. That takes the total tally for the Hong Kong market. The rally in the last 1 month is 31%. And we're still seeing some green on top of that. So that continues to be one of the big watch points. By the way, there are lots of central bank meetings across Asia this week. There is the Bank of Korea. There is the Reserve Bank of New Zealand. Both these banks are expected to cut rates. And then there is our very own Reserve Bank of India. We are not going in with a rate cut expectation, but a lot of economists are watching out for a potential change in stance. So more on that coming up as we go along through the day and the week as well. Let's talk about some of the key numbers. And the fund flow picture obviously is the one that we've been watching like hawks over here. And look at the selling once again that came in on Friday. Big selling numbers again, almost towards that 10,000 crore mark. Now, if I talk about the cumulative selling, over the last 4 trading sessions, then the numbers are really piling up. It was around 9,800, dipped a little bit. Then we had that gigantic 15,000 sell number. And if you thought Friday would be any relief, well, it wasn't. So we need to see when these red bars start sort of cooling down and when the pace of this selling and the magnitude of this selling starts pulling back a little bit. Now, on crude, by the way, there's a bit of an ease off this morning. Prices are taking a bit of a breather. And that's in part because of this one statement. Remember, on Friday, we were discussing another statement from the US president. Well, he talked down the market on Friday by saying that if I were in their shoes, that's Israel's shoes, I'd be thinking about other alternatives and striking oil fields. So that helped cool down some of the alarm in the market. But then the strikes are continuing. We know that Israel has conducted fresh strikes as early as this morning in southern Beirut. So one needs to wait and watch and see what happens over here. So that's a watch point. Lots of business updates, by the way, and we'll be talking a lot more about them as we go along. On the BFSI side, just 1 or 2 names to highlight. It's all about that fight for deposits, and some sort of players are coming out right on top. So, for instance, if you look at the updates, in IndusInd Bank and RBL Bank, these are 2 that really caught my attention because of deposit mobilization. The momentum there has been really good. Deposits up 15% for IndusInd. For RBL Bank, deposit growth year on year is 20%. So banks are trying to pull out all stops. Federal hasn't been that successful. So let's see. And good growth numbers from, let's say, an L&T Finance as well. By the way, Titan, speaking of business updates, beyond BFSI, Titan should be, making the street happy because the number on the jewelry business is looking very, very good. So we'll talk about a lot of this. But before we get to the individual stock action, Nigel, I guess the bulls will hope that finally they have a breather and they can come back and sort of reappear on the street today.
I think a bounce is very much due. Though the bulls, they have their hands full and they have a couple of headwinds that they're facing. One is that crude oil prices, as you briefly mentioned, they're up by nearly around 6 to around 7%. That's a macro tailwind that it's turned into a headwind now. And also you have the dollar index that's up a couple of percentage points in the past week. The FI outflows, yes, that's a worry. And also I was looking at a Motilal Oswal note today in terms of earnings growth. Well, it's going to be quite a muted one for Q2. So no big positive surprises is what the street is waiting for. But I think we're bracing for a near-term bounce on the Nifty itself. And a couple of technical factors are suggesting that. The clients, they were net short, now they're net long for the first time all the way since August 23rd. So that's one point. The second factor is the PCR. That's moved down to around 0.68. We have seen it move to even 0.63 odd before we get a bounce. But that's normally a level where, in fact, we do see a bit of a bounce. And the FI long positioning, it was getting extensive on the long side. You know, it's getting a little bit too good for comfort. And from around 3.5 lakh contracts, that's come down now to around 83,000 contracts. All of this in a matter of a week itself. So it's down by nearly around 75%. And the clients, they have been timing this market correct, right? They were net short. Now they have moved to net long positions, close to 30,000 contracts on the long side. And they're the ones that normally get it correct. So that's about client as well as the FI positioning. Now in the Nifty options data, two strikes were fairly active, the 25,200 call and the 24,800 put. Both these two very, very active, and they're giving you a broad sense where the Nifty gets its support at. So since the 24,800 put was fairly active and you have premium at around 100 rupees, the 24,700 mark is a very, very important mark. If that breaks, then you're bracing for a sharper correction. So these are the levels. We're currently around this 50 DMA. Support comes in, crucial support at around the 24,700. And the 20 DMA comes in at around 25,500. You get more confident only once we close that. Similarly for the Nifty Bank, we ended at around that 50 DMA. The 20 DMA is the mark on the upside. On the downside, the 100 DMA or thereabouts. The sense you're getting is, today you need to participate on the upside if you get that intraday dip. And then, you'll have to play it for a couple of 100 points odd. Very, very nimble-footed, but I think the bias is on the long side just for today's session. The stock I'm looking at is Infosys. Everyone's been talking about the large-cap names cracking. Well, that one's very, very close to a fresh 52-week high. And the IT index, even in Friday's trading session, was up 0.3%. So the tech space seems to be holding one end up. You'll need some support from the Nifty Bank, and hopefully the Nifty can see a bit of a relief rally.
Oh, absolutely. And I think nimble is the word that you want to keep in mind as you get set for trade today, because that's the kind of market we're in. Let's get started then. Our equity call of the morning coming in from Victor Shevitz of Macquarie. Now, he's saying that investors are giving the benefit of doubt that China will do what it takes, but it will not be easy, with the problem being demand for and not supply of money. And more radical policies are likely to run against political and social covenants. Yet he adds it feels too early to fade this rally, and as Japan of 1990s showed, these can be powerful. He says as China rallies, pressures on India will rise, especially given its slowing economy and high valuations, and liquidity will be sucked out from other EMs. Long term, Victor says they are still more comfortable with India's secular outlook than with China's battle against high saving rates. By the way, speaking of China, let's remember that today we're expecting a press conference where more of the fiscal stimulus measures, they are likely to be detailed. And Prashant, that's what we've been discussing, right? It's about whether you can really fiscally stimulate demand rather than just cutting rates, perhaps.
Absolutely. Today or tomorrow? Or
I'm going to check up on that. I thought it's one of these days.
Because
but
the market's back to the economy. I mean,
so
they come back tomorrow.
Ahead of the market, prep everybody in, and then try and meet expectations. Given a 32% rally.
All right, well, that's I think going to be closely watched.